Hello students. So welcome to this session number 10. All of you the students, you are there. Just give the confirmation. This is the link live students right now. Share the link with me students if at all you've got the link. Okay, some students have shared me the link. Good evening, good evening. Okay. Good evening to all of you. Priya, Pavan Kumar, Pramnath. Very good evening to all of you. So the first comment has already been out about the new look and the old look, isn't it? Thankfully you have given me the comment now. Now the fact that you have given me the comment, accordingly now the beard that I'll grow now henceforth, I'll ensure that I will have the same particular beard. But I don't know probably what I need to do herein. The kind of a beard, if I grow it and it will take across a year or so, then you will not even recognize me after a year or so. Anyways, so good evening to all of you students. Now this is a unique particular timing at which we are starting our revisionary session. Obviously we have discussed about the same, that the revisionary batch. Now first of all, this entire the beard part for all the lockdown period it was being grown. So today I thought that enough of it now, let's feel a bit lighter, and that is what I did. That is one thing which has been there. But yes, it was with a very heavy heart because a lot of emotions were attached on the beard and all for the last 6 months. Like from March you are continuing, and now we are somewhere in September. So obviously when you carry along something for too longer period, then obviously you in a way start becoming a bit attached to that. Thank you, Priya. So students, now let's start on this one. Today students, I will deal with that the important disallowance, the big disallowances, which I will cover it up quickly. And one is about 40 small b, which is about the partnership form, which is also there a part of your intermediate syllabus. And second one students is about the 40 AI, that non-deduction of the TDS. So these are the two main disallowances, which apart from whatever we have done so far, these are the the other two primarily the disallowances which has been there. The bigger one. So this is the bigger one, the disallowances which has been there. So and thereafter the presumptive income students, the last one happens to be the presumptive income. So the last one happens to be the presumptive income. So let's start with this quickly students. Now all of you will take up page number 'So the two big disallowances which I am going to do, and thereafter I will move to the presumptive income. So first one would be 40 small b. Can anyone tell me the page number quickly, students? 40 small b. Somebody tell me quickly the page number. There is also a practical problem on this case. This is the page number. Page number, students, is, please have a look to this one. .270. 4.270. Now, students, this can be important for your examination also. This can be an important part for your examination. You will say, sir, what kind of importance is attached to this question? So the importance that is attached, students, to this particular section is, one can be MCQ, and second, students, you can get 4 to 5 marks a practical question to calculate the and this is very likely, and I can say in a way, a hot favorite of the ICI. So students, first of all, understand one thing. The partnership assessment, students, you will all do at final CA level. In your final CA, you will do a full-fledged total income question, tax liability in respect of a partnership assessment. Here for IPCC level, you have to do only one part of the partnership assessment. That is what we are reading it right now. Only a small part. So you will say, sir, which small part that you are talking about it? So students, that particular part is 40 small b. As per 40 small b, students, the remuneration and the interest, paid by the firm to whom? Paid by the firm to the partners, that is disallowed. In this category, students, so remuneration and interest paid by the firm to its partner will be disallowed. Now, in that regard, students, 40B, however, provides that if you satisfy the conditions of section 40 small b, then and only then, in that particular case, the remuneration and the interest will be allowed as deduction. If you satisfy which condition, students? The condition of section 40 small b, then and only then the remuneration and the interest will be allowed as deduction. Now 40 small b, therefore, we are looking for two things. Which are those two things? One is the condition and second one is the limit. This 40 small b is to be looked upon for the condition and the limit. So what is that condition? If it is satisfied, that the deduction would be allowed, and up to what limit that the deduction would be allowed under section 40 small b. Let's have a look, students. First, here in 40 small b, students, please have a look to this one, all of you. So this is about remuneration. Now this is about the remuneration. Now first of all, remuneration part, students, herein, if you see over here, remuneration versus the remuneration as per the condition, this can only be given to the working partners. So if supposingly the partnership firm is giving the remuneration even to whom? Even to a non-working partner, then that much of the remuneration which is given to the non-working partner will be disallowed. So first and the foremost thing, students, is that the remuneration can only be given to whom? To the working partner. So that is one point that you should always keep in mind. Now second one, students, whatever remuneration that they are giving it to the working partner, students, whatever is the remuneration that they are giving it to the working partner, that will be allowed. That will be allowed only if the partnership deed specifically authorizes for what? Authorizes that the firm shall pay the remuneration and the interest to the partner. The firm shall pay the remuneration and the interest to the partner. So unless and until there is an authorization in the partnership deed, unless and until there is an authorization of payment of remuneration and interest by the firm to its partner in the partnership deed, the deduction of such remuneration and interest will not be allowed. The deduction of such remuneration and interest will not be allowed. And that is exactly one point that you should also keep in mind. So in this regard, students, herein remuneration to a working partner not authorized by deed. Remuneration to a working partner not authorized by deed. So this is how it has to be considered. Point number 3, students. This remuneration and interest, students. This remuneration and interest, students, has to be prospective. Has to be what? Has to be prospective. Meaning thereby, let me give an example, students. All of you will pay attention. If supposedly the partnership deed hasn't provided any remuneration, the partnership deed does not provide for any remuneration to be paid by the firm to its partner. Subsequently, the partnership deed is revised. Subsequently, the partnership deed is revised, and in that revised partnership deed, the authorization is given for the purpose of payment of remuneration and interest by the firm to its partner. In the subsequent partnership deed, the partnership deed is revised for the purpose of the payment of the remuneration and interest by the firm to its partner. So if it is revised subsequently, then the deduction will begin subsequently. You cannot have primarily the deduction given from a retrospective effect. You cannot have a deduction that can be given from a retrospective effect. So the deduction will only be prospective, it will not be retrospective. The deduction, students, will be prospective, it will not be retrospective. Did you all got this one? Good evening, Priyadarshini, Vivek. Good evening. So that will not be retrospective. Keep this particular point in mind. So that is the only thing. So students, what you are supposed to revise for remuneration? Point number 1. Point number 1 for remuneration is that it will not be allowed to a non-working partner. Second one is the fact that the remuneration to a working partner will not be allowed if it is not authorized by the partnership deed. And the last but not the least, if initially the partnership deed didn't provide for the remuneration, payment of the remuneration to the partner, and subsequently the deed was revised to accommodate the payment of remuneration and the interest to the partner, then in that case the period before such revision of partnership deed, the period before such revision of the partnership deed, for that period the deduction of what? The deduction of this remuneration and the deduction of this remuneration will not be allowed. The deduction of this remuneration, students, will not be allowed. So students, that is one thing which you just keep in mind. That is your point number 3. And they have given the example also. Same thing, students. Just now apply the common sense. I have told you, if the partnership deed is revised subsequently, then for the earlier period, you cannot give the deduction for the remuneration and the partnership deed. This can be, students, an important one for an MCQ. You should just mark this to be an important one for MCQ. So they can ask you this kind of a thing, that the partnership deed is revised subsequently. Partnership deed is revised subsequently, and in that subsequent period, that from that subsequent period onwards, the deduction will be allowed. But for the period prior to that, before the partnership deed was revised to accommodate the payment for remuneration and interest, the period prior to that, for that period prior to that, no deduction of remuneration and interest would be allowed. No deduction of the remuneration and the interest will be allowed. So one thing you should always keep in mind, students, is this particular aspect. Now tell me one thing, students, what about interest? Is it necessary that the interest has to be paid only to a working partner? Answer me this. Is it necessary that the interest should be paid only to a working partner? Say. No, not. I'm not talking about 12%. I'm talking about, is it necessary that for claiming a deduction of interest, for claiming the deduction of interest, is it that the interest payment has to be made to the working partner? What about the case where the firm is making the interest payment to a non-working partner? Whether in that case also the firm will it be eligible to claim the deduction? Whether the firm will it be eligible to claim the deduction? Nishank, Chandana, Trinath, Pramnath, Ajay. So this is one of the important difference, students. Rest all the conditions, students, are same so far as the interest is concerned. So you can just here write in this context. I think they haven't made a mention of it, but please at least you can make a reference, students. Yes, Priyanka, good evening. Please make a reference of this one. All of you. Remuneration. Unlike, you can write, unlike remuneration, comma, the payment. Yes, Chandana, Trinad, Priya. Unlike remuneration, comma, the payment of interest by the firm could be for both working partner and non-working partner. Unlike remuneration, comma, the payment of interest by the firm could be for both working partner and non-working partner. Full stop. And also please write one more line after this. Please write one more condition after this. All the other condition for the allowability, all the other condition for the allowability of remuneration, all the other condition for the allowability of remuneration shall equally apply to the payment for remuneration, shall equally apply to the payment for remuneration. Full stop. Fine, students. Now the limit, if you can see over here, the limit, students, that you can see over here, if you can see the limit, the limit that has been given to us over here, see, for interest, students, the limit is up to 12% per annum, students. What is the limit? Up to 12% per annum is the limit for the deduction of interest. Up to 12% per annum is the limit for the deduction of interest. So supposingly the firm has paid to its partner an interest which is at the rate of less than 12%, which is at less than 12%, then in that particular case, will the deduction, will it be allowed? And the answer is yes, full deduction will be allowed. It is only when the payment of interest exceed by more than 12%. It is only when the payment of interest exceed by more than 12% that in respect of the excess of the interest, that the deduction shall be allowed. That the deduction shall be disallowed in respect of that excess portion. So like 15%. I have seen, students, somehow or the other, I don't know, ICI 3 times they have asked this particular question, wherein they have given the rate of interest at 15%. I don't know what kind of attachment of that 15% ICI have, but 15% has been given. Anyway, up to 12% then in that case will be allowed, and any amount paid in excess of 12%, that excess portion will get disallowed. That excess portion, students, will get disallowed. So just keep that particular point in mind, students, and that should be all. More important point is about the remuneration limit, students. The maximum remuneration. So whatever is remuneration, students, that will be paid by the firm. Please pay attention. Whatever is the remuneration that is paid by the firm to its partner, that the remuneration, students, as per the books, you will disallow it. You will disallow it, and then you will determine how much maximum remuneration that is allowable as per the calculation of section 40B. How much is the maximum remuneration that is allowable as per the calculation of section 40B? And that maximum remuneration, students, that maximum remuneration will then be compared with what? That maximum remuneration will then be compared with the actual remuneration which has been paid, and then lower of the two will finally qualify for the purpose of deduction. Let's have a look then. Point number 5, remuneration to working partner in excess of the prescribed limit. Let's have a look to this one. Any remuneration paid to a working partner authorized by a partnership deed and falling after the date of the deed is in excess of the following limits. In excess of the following limits: book profit on the first 3 lakhs of book profit, or in the case of loss. Yes, Priyanka. On the first rupees 3 lakhs of the book profit, or in the case of loss, quantum of deduction, students, is 1.5 lakhs or 90% of book profit, whichever is higher. Higher, students, please don't be careful about this one. This is higher. Otherwise, we have a by default the system is set in our mind that it has to be lower. In our mind, the system is always set. But for this particular calculation of the maximum remuneration on the first slab of the book profit, where the book profit up to rupees 3 lakhs, the maximum remuneration for the first slab will be 1.5 lakh rupees, which will be compared with the 90% of book profit. You ask to me, sir, what is book profit? We will discuss that. But let's first complete this slab. On the balance book profit, it is 60% of the book profit. So in this regard, like for example, your total book profit is say 7 lakhs. Total book profit is 7 lakhs. So for the first 3 lakhs, it would be 1.5 lakhs or 90% of book profit. Book profit of what? Book profit of 3 lakhs. Okay. So this will become what? 2,70,000. So from the first slab what comes out is 2,70,000. On the second slab, on the balance of the book profit, students, on the balance of the book profit, 60% of the balance amount. So what is the balance amount? 3 lakhs is for the first slab. The balance would be 7 lakhs minus 3 lakhs. So 4 lakhs, 60%. This comes to 2,40,000. So from the second slab, you can give 2,40,000. So from the first slab, 3 lakhs. From the second slab, 2,40,000. So maximum is 5.5 lakhs. 5.4 lakhs. So this is the maximum, students. Maximum. Now this maximum remuneration will be compared with the actual remuneration, and whichever is lower will be the amount of remuneration that will be allowed in the hands of the firm. Please be careful, students. Last time I am saying to you this. You will come to this limit. You will come down to the limit to know the limit of the remuneration that could be allowed as deduction only if what? Only if the conditions for the remuneration under 40B is satisfied. If the conditions are only violated, then there is no point to come to this limit stage. So you will come to the limit stage only after the conditions are satisfied, students. Only after the conditions are satisfied. Now we come down to the most awaited term. Most awaited term, students, is the term book profit. Let's have a look, students, the meaning of the term book profit here. So the meaning of the term book profit. So if you see over here, the net profit, it is simply put, students, if I have to define this, it is PGBP PGBP before remuneration. As simple as that. Simple words. PGBP before remuneration. So whatever is the PGBP that you have computed, but just before remuneration. So if remuneration has been debited in the books, I already told you, if the remuneration is already debited in the books, then you will add it back, because you will determine the PGBP before remuneration. So whatever is the PGBP before remuneration, that is what would be considered as a book profit. Some students will ask, sir, if it is PGBP before remuneration, then can we say it is after the interest up to the maximum of 12% per annum? Can we say that it is up to it is after the interest of up to maximum 12% per annum? To that the answer is yes, students. To that the answer is yes. So it is before remuneration, which implies that it is after interest up to the maximum of 12% per annum. Up to the maximum of 12% per annum. With that, now we are all geared up for the illustration, students. For the illustration, students. Yes, 5.1 lakh. It is 5.1 lakh. Please come to the illustration part. A firm has paid 7,50,000 as remuneration to its partner for previous year 1920 in accordance with its partnership deed, and it has a book profit of rupees 10 lakh. What is the remuneration allowable as deduction? So a firm has paid rupees 7.5 lakhs as the remuneration to its partners for the previous year 1920 in accordance with its partnership deed, and it has a book profit of how much? Rupees 10 lakhs. What is the remuneration allowable as deduction? So I think orally itself we can solve. So firm has paid 7.5 lakhs, okay, as remuneration, but the book profit is 10 lakhs. So up first book profit 2.7 lakhs up to 3 lakhs. The book profit up to rupees 3 lakhs. Up to the book profit of rupees 3 lakhs. We all know from the first slab maximum is 2.7 lakhs. Maximum is 2.7 lakhs, and from the remaining 7 lakhs, that is the remaining book profit. How much is the remaining book profit? The 10 lakhs amount. From the remaining book profit, the 10 lakhs amount minus 3 lakhs, which is 7 lakhs. Of the 7 lakhs, 60%. Of the 7 lakhs, 60%. And that comes to 4,20,000. So 4,20,000 plus 2,70,000 comes to 6,90,000. So maximum is 6,90,000, and how much you have allowed the deduction, students? How much you have allowed the deduction, or how much you have paid? 7,50,000. Whereas the maximum calculation is 6,90,000. So only 6,90,000 will be allowed to you as a deduction. Only 6,90,000 will be allowed to you as a deduction. Fine, students. Now with this, let's come to illustration number 16, students. Illustration number 16. Rao and Jane, a partnership firm consisting of two partners, reports a net profit of, yes, Priya, it means from the first slab up to 3 lakhs, it will always be 2,70,000. But supposingly your book profit calculation is, say, only 2 lakh rupees. Possibilities are there. You cannot rule out the possibilities. So if your book profit is only up to rupees 2 lakhs, that is PGBP before remuneration is only up to rupees 2 lakhs, then in the first slab only you can give only 90% of 2 lakhs, which comes to 1,80,000. So that 1,80,000 is what is the maximum limit or maximum amount that you can allow at as a deduction. So that point has to be always borne in mind. Yes, Ashwini. So it is not a kind of a kind of a conclusion that you should draw upon that in the first slab always it will be 2,70,000. No, in my example and the example which Ashwini is right now she has given, it can be what herein. it can be even the loss as suggested herein. So in those cases, definitely you will not have 2,70,000. You will have a different figure. But yes, you can say this. In fact, if I have to reframe what you have said, I can say that minimum deduction of the remuneration, will be filling the blanks. MCQ question, students. Minimum deduction of the remuneration will be, if all the conditions are satisfied, then the minimum deduction that the partnership firm will be getting in respect of the remuneration will be what? 1.5 lakhs. Definitely, students, 1.5 lakhs. So 1.5 lakhs, at least we can say that even though the book profit may be a loss, still up to rupees 1.5 lakhs, we can still get the upper limit of remuneration. So if somebody has to say to the partnership firm what would be the minimum remuneration that you will get as a deduction, so you can say that the minimum remuneration, subject to the other condition being satisfied, the minimum remuneration for which you can easily get a deduction is up to rupees 1.5 lakhs. Okay, so these are the twists and turns that you can find it in the MCQ based question. Okay, so that is one thing that you should always keep in mind. So students, now then let's come to illustration number 16. Illustration number 16. Rao and Jane, a partnership firm consisting of two partners, reports a net profit of rupees 7 lakhs before deduction of the following items. Salary of rupees 20,000 each per month. So this is before deduction, students, not after deduction. So just be very careful. So salary of rupees 20,000 each per month payable to two working partners of the firm as authorized by the partnership deed. So partnership deed has authorized it. So can therefore we say, as per the books, how much is the remuneration? So the remuneration that they have actually paid as per the treatment is 20,000 each per month. So two partners each. So into 12. So in that very case, 4,80,000. 4,80,000 is what they have paid in totality actually. We will have to compare it later on. But let's proceed next. In this case, depreciation on plant and machinery under section 32 is how much? 1,50,000. The depreciation on plant and machinery, students, under section 32. Will this depreciation, will it be reduced from 7 lakhs? Will this depreciation, will it be reduced from this 7 lakhs? Quickly tell me this. Will the depreciation of 1.5 lakhs, will this be reduced from rupees 7 lakhs? Quickly tell me that. Ashwini, I'll tell you later on. Will this be allowed as deduction? And the answer is yes, it will be allowed as deduction, students. It will be allowed as deduction because I told you just now that book profit is the PGBP before remuneration. It means PGBP after all the other permissible deductions. It means what? It means PGBP after all the permissible deduction but before remuneration. Yes, students. So I think all of you have got hold with this point successfully. Very good. Rosh, very good. Point number 3. Interest on capital at 15% per annum. Interest on capital at 15% per annum as per the deed of partnership. The amount of capital eligible for interest is how much? 5 lakhs. So 15%, students, didn't I told you they have got some sort of an attachment to this 15%. What to do? Now amount of capital, students, is 5 lakhs. So what they have done, students, 15% of 5 lakhs, but I can allow how much? Maximum 12% of 5 lakhs. 12% of 5 lakhs. Please don't make the mistake in the examination, students. You can easily make a mistake. What you can do is that you can disallow what students have done. I can tell you the blunder. From this 7 lakhs, students have added back 3%. From this 7 lakh students, what students have done, they have added back 3%. Students, you would have added back 3% if what? This 7 lakhs is after the deduction of interest at 15% per annum. This 7 lakhs would have been after the deduction of interest at 15% per annum. But what about in this case? What about in this case? Is it after the deduction at 15% per annum? And the answer is no. This is before the deduction, and if it is before the deduction, you will then provide the deduction, and the deduction would be maximum 12% per annum. Deduction would be maximum 12% per annum. So in that regard, students, you will then reduce 12% of 5 lakhs. 12% of 5 lakhs. 12% of 5 lakhs comes to how much? That is 60,000. 60,000 you will reduce. Students, 60,000. Yes, Ashwini, 60,000 has to be reduced. So from 7 lakhs, you shall reduce 60,000. From 7 lakhs, you shall also reduce depreciation. After reducing 60,000 and after reducing 1,50,000, both, that is 2 and 3, you will get what? The book profit. You will get what? The book profit. So your finally book profit, students, your finally the book profit is, what is the book profit? Your finally the book profit is 7 lakhs minus 2,10,000. It comes to 4,90,000 is your book profit. 4,90,000 is your book profit. How come you got 4,90,000? 7 lakhs minus 1.5 lakhs minus 60,000. So that comes to 4,90,000. I hope that this book profit you have already got it. Now with this book profit of 4,90,000, first slab up to rupees 3 lakhs of the book profit. We already know if your book profit is minimum 3 lakhs, then definitely, Priya, what you have said, 2,70,000 will be there. 2,70,000 will be there. Okay, and then the excess after 3 lakhs, which is from 3 to 4.9 lakhs. From 3 to 4.9 lakhs, students, how much that would be? 3 to 4.9 lakhs would be 1.9 lakhs. 1.9 lakhs, 60%, and that gets us how much? 1.9 lakhs, 60%. Quickly get this one. 1.9 lakhs, 60%. Which is 1,14,000 students. 1,14,000. And accordingly, your maximum remuneration that can be allowed, maximum remuneration, students, that can be allowed is 2,70,000 plus 1,14,000, which brings us to 3,84,000. So 3,84,000 students is the maximum amount of the remuneration. 2,70,000 from the first slab, and from the second slab it is 1,14,000. So your maximum remuneration, the maximum remuneration that will be allowed will be 3,84,000. As against this, what is the actual remuneration? Actual remuneration that you have allowed. Actual remuneration that you have allowed is 4,80,000. So what will be finally be allowed as deduction? What will be finally be allowed as deduction? It would be 3,84,000. Yes, Pavan. 3,84,000 is what would be finally be allowed as deduction, isn't it? And that exactly is the point, students. So this, by virtue of this, students, we have done with this particular point successfully. With that, now we come to our last disallowance, which I am going to touch upon, is about what? The TDS part, students. The TDS part. Now it is also there in our chart as well, so I can just switch over to the chart if you want and wrap it up. In any case, it's simple one. Students, all do one thing. You can make this particular note. Because this is an important disallowance which you can always get in the examination. TDS default. TDS default on payment. So particulars default 1, particulars, default 1, TDS, not deducted, default 2, TDS, deducted, at the time of payment, TDS deducted, at the time of payment, but not deposited on or before the due date for TDS payment. Trinath, this limit is for the aggregate. The 3,84,000 is for aggregate, not for each partner. That 3,84,000 that we have worked out, that is for whom? For aggregate, not for each partner. All of you have written. So default 1 is TDS not deducted at the time of payment, and default 2, TDS deducted at the time of payment but not deposited on or before the due date for TDS payment. On or before the due date for TDS payment. Have you done all of you this particular point? Fine, students. Now before I start putting the particulars, one last point which I just want you all to know before I start putting the particulars. Okay, so one last particular point which I want all of you to know is this. So this you will ensure to be take a note of it, which is say 40 AI students. So let's write like this. If the payee, what do you mean by payee? Payee means receiver. If the payee, what do you mean by payee? Payee means receiver. If that payee is a non-resident, then TDS default, which you all know, 1 or 2, will attract 100% disallowance. Will attract 100% disallowance. And second, if the payee, that is the receiver, is a resident, then TDS default will attract 30% of disallowance. 30% of disallowance on the payment so made. 30% disallowance on the payments so made. So if the payee, that is the receiver, is a resident, then the TDS default, students, will attract 30% of disallowance on the payments so made. Now, who is the one who is making a default on payment? Who is the one who is making the default on payment? It is a payer. So the default is made by the payer. So it is a payer who makes the default, and because of the default, that the consequence will be there. That consequence will depend upon who is the payee. If the payee happens to be the non-resident, then the quantum of disallowance that will take place would be 100%. Then the quantum of disallowance that will take place would be 100%. Whereas if the payee is the resident, then the quantum of disallowance will be 30% of the amount so paid. Quantum of disallowance will be 30% of the amount so paid. Now, in this regard, students, let's have a look. Point number 1. Point number 1. Consequence of the default. Consequence of the default. Right herein, whether it is default 1 or default 2. Payment made, disallowance. Payment made, disallowed. Now, as I told you, it can be 100% or 30% of the payment made. 100% or 30% of the payment made. As I told you just now, students, it all depends upon what? Who is the receiver? Who is the payee? So on the basis of the payee of that amount, the quantum of the disallowance will be decided, whether the disallowance will it be 100% or the disallowance will it be 30%. On the basis of what, students? On the basis of who is the payee. Fine. Now, apart from that, next point, whether any grace period available to the payer. Here, no. Here, yes. That is, the TDS so deducted. The TDS so deducted if it is the TDS so deducted if it could not be deposited before the TDS due date, but could be deposited on or before the due date of filing of the ROI under section 139(1). For your case, friends, what is the due date? It is 30th November now. We all know, because this COVID and all, it is 30th November 2020. on or before the due date of filing of the ROI under section 130.1, then the then no disallowance would be attracted in this case. No disallowance would be attracted in this case. No disallowance will be attracted in this case. If you're through with this, let me know. Through with this, students, please let me know. Fine. Fair enough, students. So in this case, now please come to the second one. So here, whether any grace period available to the pair. So students, no grace period available in the first case. No grace period available in the first case, but yes, the grace period is available in the second case. That is to say, in the second case, students, what can happen? The pair himself, the pair in the second case, what they will do? He has missed the TDS due date. He may have missed the TDS due date, but if he has made the deposit on or before the due date of filing of the ROI, if he has made a deposit on or before the due date of filing of the ROI, then in that case, he will be allowed the benefit of the deduction. In that case, students, he will be allowed the benefit of the deduction. That is to say, no disallowance will be attracted. Now, there is one last twist, which is also an important one, students, here. Point number 3. Point number 3. Students, now, in the first case, you can easily say in the case the first default. If you see very carefully, the first default, TDS has not been deducted at the time of payment. So, it means that say 100 rupees has been 100 rupees is the amount that has to be paid. Ideally, what should have happened is that the payer should have deducted the TDS of 10. The payer should have deducted the TDS of rupees 10 and should have remitted rupees 90 to the payee. He should have deducted the TDS of rupees 10 and should have remitted 90. The 10 that he has deducted, he should have deposited to whom? To the government. He should have deposited to whom? To the government. And that exactly what should have happened. That exactly what should have happened, isn't it? However, if you see over here, students, what will be the situation? The situation would be like this, that if the TDS has not been deducted at first place, then the full amount would have been paid. Then the full amount, students, would have been paid. Do you all agree to this? Yes. So the full amount, students, in this regard would have been paid. And if the full amount would have been paid, then what would have happened? Then the payee, the receiver, what he would have done, he would have captured the entire 100 rupees in his ROI. He would have captured the entire rupees 100 in his ROI, and thereafter what? Thereafter, he would have also paid the tax as well in respect of such amount. He would have also paid the tax as well in respect of such amount, isn't it? So if these conditions are satisfied, that the payee, the receiver, has taken into account the entire amount that has been received in his return of income. Secondly, the payee also has paid the applicable amount of tax. The payee also has paid the applicable amount of tax on such particular payment. If these conditions are satisfied, then the payer will not be considered as a person in default. Student, the payer will then not be considered to be a defaulter. But yes, in the but the payer will not be considered a defaulter. But yes, the payer will have to suffer the disallowance in that previous year in which the expenditure is incurred. So, for example, your previous year is 1920. So, in the previous year 1920, he will have to suffer a disallowance. But in the next year, when the payee has filed the return of income, then in the next year, the payer will be allowed the deduction of that amount, which was disallowed in previous year 1920. So this is what runs in this case could be considered, and that exactly how you have to take into account. So point number 3, students, if you can just take a note of this one. For point number 3, isn't the answer to particular 1 and 2 of the default 2 is contrary to each other? Means answer 1 and 2. I didn't got it. Particulars 1 and 2 in the case of default 2 contrary to each other. No, this is not contrary. They are all independent. This is not contrary. They are independent. What do you mean by independent? Independent means that if you have made a default, disallowed. If you have made a default, then disallowed. This second particular is what? When they will look into it, that okay, if you have paid that amount on or before the due date filing of the return of income, if you have deposited the TDS, the payer who has deducted the TDS, if he has deposited a TDS on or before the due date of filing of the return of income, then in that particular case, what you can do? Then in that particular case, this particular amount so deducted will be which has been deposited on or before the due date filing of the return of income. Therefore, we say no disallowance. So, if the question is silent, they don't tell you anything about particular number 2. If the question is silent and they don't tell you anything about particular number 2, you will simply go and do what? Disallowance. Depending upon who is the payee, whether the payee is a resident or whether the payee is a non-resident. So you will simply do a disallowance in this case. Did you all got this one? But if the question further says that having deducted the TDS, the deposit of the TDS was made by the payer on or before the due date of filing of the ROI under section 139(1), then you will say what? You will say that no disallowance will be attracted under the respective provision. So entire expenditure that has been paid to the payee will be allowed as deduction. Entire expenditure that is been paid to the payee will be allowed as deduction. Point number 3. Point number 3, if you see over here, yes, Ashwini, true. If the payee himself makes the compliance payee himself make the compliance. So here it is not applicable. Here you'll write for default one, if the payee takes into account the entire sum received if the payee takes into account the entire sum received from the payer in his ROI, comma, pays the essay tax. Essay tax means self-assessment tax as applicable on such payment and pays the essay tax as applicable on such payment and files the ROI under section 139. Then the payer, then, or you write in the simple word students, then the following shall be the consequence: disallowance 100% or 30% of the expenditure in the year in which the expenditure is incurred, and second, deduction allowed or write like this: the amount that was disallowed shall be allowed as deduction if the amount that was disallowed shall be allowed as deduction if the not if the in the year in which the payee files the ROI under section 139. In the bracket write students, that is the next year. it will be allowed as deduction. That is, next year it will be allowed as deduction. Please copy it on this quickly. All of you through with this? Let me know. Priyanka, in this case, will he be allowed the same which was disallowed in the previous year? Yes, Priyanka. Whatever was disallowed in the previous year in which the expenditure was incurred, whatever was disallowed, the same amount will be allowed. So it is always like this only. Whatever is disallowed, the same would be allowed. So if 100% was disallowed because the payee was a non-resident, then 100% will be allowed in the next year when the compliance is done by the payee. But if 30% was disallowed in the year in which the expenditure was incurred because the payee was a resident, then 30% will be again be allowed in that regard in the next year. Did you got this one, students? So this is one of the very important compliance, students, which is there for the TDS part. Very, very important compliance which is there for TDS part. If you have to have a look on this one. With this one now, students, herein we are done with this. Now all the small things are there. From your side, I'm just giving you a homework, very simple one, which is also there in your chart. You can do it from your chart. All the small deductions, students, all the small deductions like 3, 4, 4, for any case you can skip it. They will not ask you. So 3, 5, 3, 5. That should be all. 3 and 5. That should be all. 3 and 5. Okay, so do 3 and do 5. Okay, with this then we are done with this particular stuff, and we can now come to our question and answer segment. Friends, hopefully question number 1 and question number 2, the depreciation part, all of you would have gone through it. So question number 1 and question number 2, all of you would have gone through it. Have you all gone through this one? Question number 1 and question number 2. Now, in this context now, students, let's look upon to this question. Question number 7. There are two parts in this question. I don't think this lengthier question can come in the examination, although a part of the question can come. They can ask a question of this sort. Let's see in this case. So question number 7, students. Let's take into account question number 7 first. Mr. Shivam, a retail trader of Cochin, gives the following particulars of the profit and loss account. For the year ended 31st March 2020, opening stock 90,000, to purchase 1 crore 10 lakhs 4,000, and the gross profit. Sales is 1 crore 12 lakhs 11,500, and the closing stock is 1 lakh 86,100. After that, students, you have been given the salary, rent and taxes, the interest on loan, the depreciation, to printing and stationery, thereafter the postage and telegram, to loss of on sale of shares short term, to other general expenses. And if you see on the credit side, then there is an income from UTI 2400. Now if you would have seen up till now, students, this question, up till now that you have read it, you would have come to know that there are three heads of income. Can you identify which is the heads of income which is there in this case right now? In the profit and loss account that you have read so far, there are three heads of income. Please identify the three heads of income which are there in this particular P&L account. Quickly. Identify quickly, students, which is the three heads of income which is there in this profit and loss account. It is PGBP always has to be there. Thereafter salary. Salary, how come salary is there? There is no salary, it is PGBP, it is IFOs, and it is capital gains. So this is capital gains, this is IFOs, and remaining is PGBP. I have already told you, students, in my earlier lecture that for the head PGBP, the base is the net profit as per books for business. The base is what? The net profit as per books for business. So that is a base for PGBP, net profit as per books for business. So from this net profit, students, first head which I am going to compute would be PGBP. Next head would be short term capital gains or loss, and the last one would be IFOs. So first what I need to do, because for me, for PGBP head, the base amount is what? Net profit as per books, but for business. So therefore I need to then eliminate from this net profit the income which is chargeable under the other heads. Same way, the loss that has been debited for the other heads of income, the loss which has been debited for the other heads of income, even that loss, students, has to be eliminated in determining my net profit as per books for business. And this net profit as per book for business happens to be the base amount, and on that base amount the further PGBP adjustment will be made. On this base amount the further PGBP adjustment will be made. Now let's have a look to the additional information. It was found that some stocks were omitted to be included in both the opening stock and the closing stock, the value of which are opening stock is 9,000. So it has not been included. So students, this means this is not correct. Opening and closing, students, is not correct. So therefore, how much undervaluation? Undervaluation is 9,000. So I will add this by 9,000 in my opening, and there is an undervaluation in my closing stock because they have omitted. So I'll add 18,000 here. So if you see over here, students, the debit add is 9, the credit add is 18, the net of, if I do my credit add, would be 9. So if the credit add is 9, in that case, students, my net profit as per books for business, of 50,000 will be adjusted first, as you all know, will be adjusted first in respect of these two items, and after adjusting these two items, thereafter what? Thereafter, the net of 9,000 plus. Why 9,000 plus? Because debit is 9,000, credit is 18,000. Debit is 9,000, credit is 18,000. So net of you have done and you have got what? 9,000 has to be added further. 9,000 has to be added further, students, because your credit is higher. And therefore, if the credit is higher, then the income to the extent of 9,000 has to be enhanced further. And that is what you are going to do. Point number 2, students. Herein, point number 2. Salary includes rupees 10,000 paid to his brother. Salary includes rupees 10,000 paid to his brother, which is unreasonable to the extent of 2,000 rupees. Unreasonable to the extent of rupees 2,000, students. So, if it is unreasonable to the extent of 2,000, then to the extent of 2,000 it will be disallowed. It will be disallowed means added back. Point number 3, the whole amount of printing and stationery was paid in cash by way of one-time payment. Whole amount of printing and stationery. So this will be added back. This will be disallowed. Whole amount of printing and stationery was paid in cash. Any payment in excess of rupees 10,000. Any payment in excess of rupees 10,000, if paid otherwise than by way of the prescribed mode. If paid otherwise than by way of the prescribed mode, then the whole of the amount will be disallowed, students. So what is it? Whole of the amount 23,200. 23,200, students. So therefore the whole of the amount, which is 23,200, will be disallowed. Please don't make the mistake of only disallowing the excess of the amount. There are students who may make the mistake. There are students who may make the mistake of disallowing only the excess amount. No, please don't do that. You have to disallow the entire amount. If it is 10,001 also, please disallow the entire 10,001 and not only rupees 1. Okay, so that is one thing that you have to be careful in terms of the cash payment, in respect of the cash payment. Now, point number 4, the depreciation provided in the profit and loss account is rupees 1,05,000. Yes, it is 1,05,000. Was based on the following information. See, what is that information for the depreciation allowance? The WDV value of the plant and machinery is rupees 4,20,000 as on 1st April 2019. A new plant falling under the same block of depreciation was bought on 1st of July 2019 for rupees 70,000. Two old plants were sold for 1st October 2019 for rupees 50,000. So students, in that case, our block, if I have to make opening WDV of my block, is 4,20,000, isn't it? Then there is an addition which has taken place on 1st of July. Additions has been made 70,000. Now the asset has been put to use for more than 180 days. The asset is put to use for more than 180 days, students. And then less what? 1st of October money payable. Two asset has been sold, and that is for 50,000. So what is the WDV which is left out after this? It is 4,40,000. And if it is 4,40,000, then the depreciation under section 32 at the rate of 15%. Can anyone tell me what is the depreciation rate? 15% on 4,40,000, students. 15% on 4,40,000. What would be the amount? 15,000. 15% on 4,40,000. So what is that amount? $66,000. 66,000 is what should have been allowed under the income tax law. Whereas as per the books, how much you have debited? As per the books, how much you have debited? 1,05,000. So depreciation as per the books, 1,05,000 would be added, and depreciation under section 32 of rupees 66,000 would be reduced. Depreciation under section 32 of rupees 66,000 would be reduced. Fine, students. Now if you come to point number 5, rent and rates includes the GST liability. Rent and rates includes the GST liability of 3,400 paid on 7th of April 2020. Rent and rates includes the GST liability of 3,400 paid on 7th of April 2020. Students, we all have seen, if you have seen 43B, yesterday also we have seen in our chart, indirect taxes. If you see in your chart also, it was being given. And what was that? Even the indirect taxes, students, what is there? If you see here, 43B covers even the tax, duty, cess or fee, the indirect taxes. So if you have made the payment, even though in respect of this, the amount is allowed as deduction on the payment basis. So if you have made the payment on or before the due date of filing of the ROI, if you have made the payment on or before the due date of filing of the ROI, will this be allowed as deduction? And the answer is yes, it will be allowed as deduction. So students, the GST, which is the liability which is to be paid, in this case 3,400 will be allowed as deduction. So the rent and rates of 36,000 includes the GST. So since it is already included, students, am I going to further reduce 3,500 or I am going to ignore it? Please tell me, am I going to reduce further 3,400 or I am going to ignore it? What is your answer? Am I going to reduce 3,400 or I am going to ignore it? Say fast. And indeed, what Ashwini has said it is correct. Dishank, Priyanka, yes, indeed. Because it is already included in the rates and taxes, it is already debited. So your net profit is determined after reducing this particular amount. So therefore you are not again supposed to reduce it by 3,400. If you again reduce it, then in that case it will be a double deduction. Don't make these mistakes, students. You can easily fall in trap. So please avoid to make these mistakes. Point number 6. Other general expenses include rupees 6,000 paid as a donation to a public charitable trust. Now public charitable trust, students, that will give you ATG deduction. That will give you what? ATG deduction in this regard. So ATG deduction will be given to you, not over here but in ATG. So that donation would be added back. So this 2,000, can you see, that has been added back. So that is what it is, students, in this regard. So you can do this first. Where is the UTI? Income from UTI. This you can do the second, add in less, and thereafter, once you do this to add in less, you will get what? Net profit. After 1 and 2, adjustment, you will get net profit as per books for business. And then you do all the adjustment that we have discussed. So see, you will find all the same thing. So that 1,30,000, students, becomes your PGBP. 1,30,000 becomes your PGBP. See the depreciation calculation also, 66,000. You add 1,05,000 and you less 66,000. Okay. After that, undervaluation of the opening stock, which is there, that will be reduced. But what you have to add is the undervaluation of the closing stock. So your credit side is much heavier. So your net effect is add 9,000. And the rest of it, whatever we have discussed, has been taken into account. I am not touching upon 44AD. I am not touching upon 44AD right now because we have not yet discussed. So let it go so far as 44AD is concerned. Now I'll discuss quickly with you this question so that question number 9 can be an assignment for all of you. Let us discuss this particular question. Mr. Raju, a manufacturer at Chennai, gives the following manufacturing, trading and profit and loss account for the year ended 31st March 2020. So opening stock, purchase of raw material, manufacturing, wages and expenses, and to gross profit. On the P&L credit side, buy, sales, closing stock. Thereafter, students, to administrative charges 3,26,000, to SGST penalty. Students, we all have seen yesterday class itself. This penalty would be disallowed, will not be allowed as deduction. GST paid. So it is good that it has been paid because only on payment basis you will be getting reduction. General expenses 54, to interest to bank on machinery term loan. Students, be careful. Machinery term loan, students, we have discussed something. If you remember, I have told you that if for a machinery if you have taken a loan, for a machinery if you have taken a loan, for a depreciable asset if you have taken a loan, so till the time the asset is put to use, till the time the asset is put to use, it will be capitalized. The interest expenditure, students, will be added to the actual cost. The interest expenditure will be added to the actual cost, and only after the date the asset is put to use, only after the date the asset is put to use, that the interest expenditure will be allowed as deduction, that the interest expenditure will be allowed as deduction. This we have discussed in the yesterday's class. So right now, by going through this information, we are not getting the awareness, that whether this 60,000 of the interest expenditure, whether it is whether it is after the asset is put to use or it is before the asset is put to use. Let's see the discussion further. To depreciation 2 lakhs, please come to the credit side. Buy dividend from the domestic company. Students, this will go under which head? IFOS. Although in IFOS, students, in IFOS it will be exempt, but at least this is the IFOS item. Same way, by income from agricultural net, this is also an exempt item. But therefore, what I am going to do, from the net profit, as I told you, the first and the second adjustment would be eliminating the other heads item. So what I will do is that my first and second adjustment to eliminate these two, so that I will arrive at, after eliminating these two, I will arrive at net profit as per books for business. I will arrive at what? Net profit as per books for business. Thereafter, following are the further information relating to the financial year 1920. And what is it? Further information: administrative charges include 46,000 paid as commission to brother of SSE. The commission market value is 46,000. So how much will be disallowed? 10,000. Excess of the expenditure in a related party transaction, then the excess expenditure will be disallowed. Second point, the SSE paid rupees 33,000 in cash to a transport carrier, students. This amount is included in the manufacturing expenses. So will it be disallowed? And the answer is no. We have already seen yesterday that the limit is 35,000. The limit is 35,000. And therefore it will not be allowed as deduction. Therefore, no disallowance will be attracted in this case. No disallowances will be attracted in this case. For a transporter, we have seen yesterday it is 35,000. Okay. So no disallowance. Point number 3. A sum of rupees 4,000 per month was paid as a salary to a staff throughout the year, and this has not been recorded in the books of accounts. Sum of rupees 4,000 per month was paid as a salary to a staff throughout the year, and this has not been recorded in the books of accounts. So if it is not recorded, then please record it, because you can claim a deduction. So how much you can claim a deduction? Easily 36,000. So if this expenditure is for the purpose of business and profession, you can claim a deduction. So please ensure that from the net profit as per books, after you have determined for business, from the net profit as per the books after you have determined for business. How you are going to determine it for the business? By eliminating those two items which is under the head IFOs, and those two items are dividend and second one is the agricultural income. Although under the head IFOs also it is exempt, but it is not a business item, it is the other head item. So students, this 36,000, students, this 36,000 I am going to reduce it. Now point number 4, bank term loan interest paid up to 31st March 2020 was rupees 20,000, and the balance was paid on October 2020. Now students, over here 60,000 is there. So 2020. So it is, we will not do the capitalization, students. Now the question does not say that this interest expenditure is up to the period that the asset is put to use. This observation is not there in the question. They are not saying in the question that this interest expenditure is up for the period when the asset is put to use. That is not given to you, students. And if that is not given to you, so we will claim for a deduction. Students. Now, do you know what is the problem over here now? They have taken October 2020. They have taken in October 2020. I can see that in the solution, students, they would have disallowed the balance interest. Can you see this? Bank term loan interest paid after the due date. Didn't I told you, students, because of the COVID factor, the due date has been increased to 30th November. All the due date to file the ROI has been increased to 30th November. So now in your examination, students, this will not be October. In the examination, it should be December. If it has to be disallowed, the way they have disallowed it, if it has to be disallowed, the way it has been disallowed it, then it has to be December 2020, because up till October, students, in this case, up till October was as per the old law, but now, knowing the fact that now your due date to file the return of income has been extended to 30th of November, so the question has to be after 30th of November for the purpose of disallowance. So here, because of 43B we have seen, students, that if you have taken a loan from the bank, then the deduction of interest on that loan amount will be allowed in the year in which the interest is paid. In the year in which the interest is paid, only in the first year you have the grace period, and the grace period is you can make the payment of that expenditure up to the due date of filing of the ROI. Up to the due date of filing of the ROI. So students, in this regard, what we can say is that up to the due date of filing of the ROI, which is 30th of November 2020, you could have made the payment. So you have made only rupees 20,000 as the payment. So balance 40,000. The balance 40,000 will be disallowed. Okay. Again, for the last time, I am telling to all of you. This was only a googly that they have given here by just creating a confusion in the mind on machinery term loan. This was just to create that confusion. And what is that confusion? That whether I am supposed to capitalize it or not. Again, I am repeating it, students. If the question is silent the way it is given it over here, if the question is silent the way it is given it over here, then please do not think about capitalization of the interest expenditure. They have to be specific. Specific about what? That this interest pertains to the period up to the date the asset is put to use. Then that interest expenditure, then the interest expenditure up to the date, up to the period the asset is put to use, that interest expenditure will be capitalized. So therefore, if they are silent the way they are right now over here, so it would be a normal interest expenditure, and accordingly it will qualify for deduction. But the fact that the loan has been taken from the bank or from the public financial institution, the interest expenditure will be allowed as deduction only when it is paid. In the first year, the payment can be made up to the due date of filing of the ROI. So just keep this point in your mind, students, on this point number 4. Thereafter, point number 5. Housing loan principal repaid during the year was rupees 50,000, and it relates to the residential property acquired by him in previous year 1819. For self-occupation. Interest on housing loan was rupees 23,000. Housing loan was taken from Canara Bank. These amounts are not dealt, students, because this amount was not dealt. In this case, this is your HP income. For self-occupation. So SOP unit. So this is SOP GAV for the SOP unit. The GAV for SOP unit would be nil in house property, and you will be allowed the deduction. Of interest of 23,000. So 23,000, students, would be your house property loss. 23,000 would be your HP loss. The interest on the housing loan. Taken for the purpose of SOP unit will be allowed. How much is allowed? Minimum is 30,000, maximum is 2 lakhs. Minimum is 30,000. 30,000, it starts from the range, one case is 30,000, another case is 2 lakhs. You will ask, sir, which is the case of 30,000 and which is the case of 2 lakhs? That we will discuss it in the HP topic. And the last one, students, point number 6. Depreciation allowable under the Act is to be computed on the basis of the following information. opening WDV as on 1st of April 2019, 12 lakhs. Additions during the year used for more than 180 days, 2 lakhs. Total additions during the year is 4 lakhs. Compute the total income of Mr. Raju for AY 2021. So depreciation you can easily compute from this, isn't it? In this case. So we can say, students, here 12 lakhs is the open WDV, 2 lakhs is the additions, but which is used for more than 180 days. Total additions during the year is 4 lakhs. So how do we interpret this part? How do we interpret this part? Quickly tell me one thing. How do we interpret this part? Quickly, students. How do we interpret this part? Ashwini, indeed. Additions made during the year used for more than 180 days. Used for more than 180 days, 2 lakhs. Total additions during the year is 4 lakhs. What does it imply? It implies that out of the 4 lakhs which is given to you, out of the 4 lakh that has been given to you, 2 lakhs therefore is asset which is put to use for less than 180 days. 2 lakhs is that asset which is put to use for less than 180 days, and therefore on that 2 lakhs amount, 7.5%. On that 2 lakhs amount, students, 7.5%, and on the other addition of 2 lakhs which has been used for more than 180 days, you will go for the normal depreciation. Now this is a classic question on the total income computation. This is what you were telling me and asking me in the first class, that the total income question. So this is giving you an opportunity. So students, here in that there are 3 heads. 3 heads would be considered. One is PGBP, another is IFOS, and in IFOS these 2 income will be exempt. And in IFOS this 2 income will be exempt. One is dividend from domestic company and second is the income from the agriculture income. The third head is house property SOP. Negative, students, negative SOP of 23,000. Negative SOP of 23,000. Negative SOP of 23,000. Now whether a house property loss, can that be set off from the normal PGP income? Set off, students, can that be loss, can be set off against HP loss, can that be adjusted against the PGP income? Yes, it can be. Yes, it can be. Okay, because it is total income. One adjustment we have forgotten, students. Students, ATC deduction. ATC deduction, because total income they are asking, not PGP, total income. Students, in ATC, if you repay the principal portion of your housing loan amount, if you repay the principal portion of your housing loan amount, then on that repayment you get ATC deduction. But on principal payment, interest is in house property head. ATC chapter 6 reduction, if you repay the principal portion, then on the repayment of that principal portion you get ATC deduction. You get what? ATC deduction. And that is exactly what they are doing it over here. ATC deduction, students, you are going to get. However, students, under section ATC, what is the maximum amount or what is the maximum limit of deduction? What is the maximum limit for ATC deduction, students? Quickly. What is the maximum limit for ATC deduction? ATC. Maximum limit of ATC deduction? 1.5 lakhs. Yes, Nishank, Priyanka, Rosh, it is 1.5 lakhs. So obviously the principal repayment which has been mentioned to you, is only 50,000. So definitely ATC full deduction of 50,000 will be allowed. So students, as I told you, first you will, in your net profit as per given to you, which is 5 lakhs, from this net profit eliminate these 2 items first, because any case this would be item under the head IFOS, and in IFOS also they are exempt. So IFOS is in any case nil after exemption. But from your net profit, you need to eliminate these two items quickly because they don't pertain to PGP. So you arrive at, from this, your first step has to be arrive at net profit as per books, as per books for business, as per book for business, for which you need to eliminate 5 lakhs. From 5 lakhs you minus 1,80,000 and 15,000, which is 1,95,000, and that gives you 3,05,000. 3,05,000 is your net profit as per books for business. 3,05,000 is the net profit as per book for business, and then do all the adjustment, students, that we have discussed. All the adjustment, penalty disallowed, 5,000 penalty disallowed. Okay, then the interest 40,000 was disallowed because we have changed it to December, so 40,000 would be disallowed. Thereafter, all the other adjustment, 10,000 excess, this 10,000 will be disallowed. Here 33,000, that will be allowed. So no further anything. Here 36,000 would be reduced. 36,000 would be reduced. And thereafter depreciation amount would be calculated after taking into account these information. And once you are done with this, you will get your PGBP. After that, IFOS, it is any case nil. IFOS, it is any case nil. House property negative 23,000. You get your GTI. From GTI, ATC. ATC is 50,000 total income. Yes, Nikita. So I hope that now, students, all of you have got hold with this point. Fine. So please go through this question. Very important question, students, and this will give you the necessary practice as far as this point is concerned. Please go through it quickly, students, herein, and then what I will now deal with it, students, would be maybe 1 hour tomorrow we will quickly wrap up, same time 9 o'clock. 1 hour tomorrow we will quickly wrap up the presumptive income, so that entire PGBP, students, entire PGBP is through then. Fully and very comprehensively I have done it. And also on respect of this presumptive income, if certain questions are there, we will do that questions and we will be done with this thing entirely. Fine, students. So please do this question, what is there in front of you, do them, and that should be all. Fine, students. Any doubts that you have, do let me know. Om sir, I'll ask him first. Ashwini, I'll have to check with him. I haven't checked at this stage, so I'll check it maybe tomorrow or so. Fine, students. Fine. So now, students, herein basic concept we have done. Thereafter, we have also taken into account the scope of total income in earlier lecture, residential status and scope of total income section 9, which was very technical in nature. And thereafter, now the PGBP biggest head. So just go with this flow. The chart is the base. This is the only practice I am doing with all of you. See, at the end of the day, you will keep on revising the chart. But since I have to make it a bit comprehensive, that I am doing all these questions with all of you. Otherwise, I could have also wrapped up easily by reading the chart and considering the fact that this chart is there. But the fact that they have thought of it, making it a bit comprehensive because we have a bit of time. So just adding to a bit of comprehensivity as a last minute revision now. This is your last comprehensive revision. Beyond that, now you cannot think of any other comprehensive revision, isn't it? So do it the way we are doing it in this context and try to close this important subject on income tax and the vast subject at the same time. Fine, so we are now nearing to capital gains. Again, a biggest head. Once CG and PGBP is done, rest of the heads are, students, small heads. So that will not take much of time. And let's try to wrap it up. Okay. Do this question number 9 quickly. This question. This question, students, you will all do it quickly now. Question number 9. Get started, students. Okay. Thank you.